November 20th. Just two earnings trades that we closed out of today, and then two new orders. It was actually a pretty good day. I mean, with the market and most stocks off a pretty decent amount, we actually made a good chunk of change on Friday alone, particularly in WSM and GPS. We made some good money in some of these earnings trades. As always, inside of our platform here, you can see all of the trades are historically archived. This is the two earnings trades that we made. Again, back on Thursday, we sold that Strangle and WSM for $457, and then you can see again that's that whole archive and history here. That GPS straddle we sold again Thursday after or very close to the close of the day. In GPS, this one actually came in just a little bit. Implied volatility dropped down to the 58th percentile. We were only able to get a little bit of money out of the trade. Remember, we sold it here for $1.42, bought it back for about $133. So only took about a $9 profit. It still goes up as a small win for tracking purposes, but really what kind of hurt us in GPS wasn't the drop in implied volatility. That was very helpful. It was the fact that the stock opened and then continued to rally pretty much all day. It was one of the few stocks that had a really good, strong rally for most of the day. It was up about 7.5% on the day. So again, it just kind of worked against us as far as price-wise. The other trade that did work out really well was WSM. This trade we were able to close out for a $1.64 profit very shortly after the market opened. So we were probably in this trade for maybe a total of 15 minutes all around, and took a nice profit of about $293 on this thing. And again, because we were a little bit more aggressive with implied volatility up in the high 90s for WSM, implied volatility dropped quickly down to the 39th percentile. And you can see here on the chart that that drop in implied volatility was really, really helpful and beneficial into decaying the value of these options really quickly. And pretty much the stock didn't move all that much. I mean, it was down on the day about 3%, but the market was expecting a much larger move for WSM, and therefore the option pricing was really jacked up before earnings were announced. So took a nice big fat profit in WSM. All right, so two new trades that we had. Just these are not earnings trades; these are just regular kind of neutral position trades. First one is in GoPro. Now, GoPro has actually been kind of really hurt the last couple of days, and honestly has been just on a little bit of a downward move. But we're going to play GoPro a little bit neutral. We're going to do a nice wide iron condor in GoPro. Again, the outlook here is neutral. We're not anticipating a rebound necessarily or a continued drop. We just want to play it as neutral as possible. Implied volatility is in the 59th rank percentile, so that's pretty good. It's not incredibly high, but it's not incredibly low. And so what we did is we went all the way out to January expiration, and we sold the 25-27 call spread. So again, here you can see all the opening and selling that we're doing. So we're buying, selling, etc. But we sold the 25-27 call spread above the market and the 15-13 put spread below the market for GoPro. Now again, the whole reason that we're doing this is we want to be as neutral as possible. We know that the market is a little bit crazy right now for GoPro, okay? So we have the 15s below the market. You can see our short strikes are down here. I've got the 25s above the market, which is right about here. So as long as GoPro trades somewhere in this range over the next week or a couple weeks, that's really ideally what we're looking for in this stock, is just a little bit of sideways action and movement. And again, for that, we're going to take in a nice little credit of $53 on each of these contracts that we sold. The other trade that we got into was a nice strangle in X, which is US Steel. That's not a typo. I know some people said, they were like, Kirk, that's a typo in there. Nope, that's the ticker symbol for X, for US Steel. So we got into a nice strangle in US Steel. Again, we went out to January just because December seems a little bit too close. Implied volatility very high in US Steel right now, but again, we're keeping our allocation small because it is a strangle. So we do have undefined risk here. As always, if you want to define your risk, just take a look at the trade comments, because we talked about possibly buying the 4 puts and the 14 calls on either side of the market to define your risk and create an iron condor. So all of our trades that we do here, you can do in any type of account. You just have to make some couple modifications and make some changes, but we talk about it in the trade comments if we ever do an undefined risk trade like a strangle or a straddle. In this case, for US Steel, we sold the 13 calls and the 5 puts below the market. So very, very similar type action here with US Steel as in GoPro. And all we're looking for is just the stock to trade a little bit sideways over the next couple weeks, and for implied volatility hopefully to come back down now that we're past some earnings and some dividends and things like that, which statistically we might see, and we should definitely play this, a little bit neutral. So both of these trades are good trades. They're good position trades for us to get on the books now for January expiration. So we're starting to make trades and starting to stack kind of our expiration dates, which is really what we ideally should be doing all the time, is having trades at different time points throughout the entire year so that we have money coming off at different